Hey, it's Mack. It's priceactiontrading.com, and today is Thursday. It's February 6th. This will be our chart lesson for today. Um, Really, we started out in this channel. It was pretty obvious that we had some strong support down here. It wasn't so obvious that we were kind of going to get hung up right here. I say channel, I meant to say range here, and then we kind of went into this channel. Which I see it's really kind of a spiking channel almost, but you have to draw this line too with kind of an equal distance just to be sure, um, that we didn't bounce off here, but we kind of broke on through there. But we did go make the new high, and then we've been started correct, and then we really made another attempt to go higher, and you can see there's a clear channel here, a bigger one here. But let me show you this. Once we broke higher and started going higher, this is what I saw. If you take this the width of this first channel, my blue lines are a little different because I've moved them around, but if you just take the highs and lows of that channel and you move it up, guess where that gives you a target to? Right there, and you can see that's about where we made it. And actually, if you just kind of take the highs and lows of the actual channel, because there's a little bit of more price action, but you can kind of see that's clearly the lows maybe right across there and the highs. And if you just kind of take that actual space from these lows right across here to these highs right across here, and you move it up, and guess what? You get almost a perfect measured move. So that's what once you break and start going higher, look to make about an equal distance move as to this area right down in here. And that's exactly what's happened. And we actually made a measured move almost equal to this whole first move up. And then you put it on top here, and that gives you almost a perfect measured move to here. And we could bounce and go higher. We may get a whole nother leg like this right here. But that's how you find targets. That's what I do to find the targets. And if you have our manuals or anything, our target manuals, we teach you how to do some of this stuff. So, and it's in the videos. You just have to kind of search around. But it's there. If you're not familiar with that stuff, go back and watch some of the old videos where I show that kind of stuff. But so that's what I was looking for on the way up here. You don't always get it in this tight a channel all the way up. But I think in the big picture that this was probably a bigger channel with a median line. It's really probably just a spike in a channel because you don't get much play off this line, and even when it comes back to it, it kind of breaks through. So I'm thinking it's more along the lines of this spike in channel. Then you get the break, the move to a new high, and you correct a little bit, and generally you'll correct for about at least a minimum of an hour or so. And I'd say this correction started at about 10:53 and it ended at 12:30. So you can see we corrected really, let's just call it 11 o'clock to 12:30. That's about an hour and a half, and then we started trending higher again. Now, there's a good chance we could go higher from here. We'll just have to see. It's getting really late in the afternoon, but that's kind of what I saw. I really think it's just a spiking channel. But I did have that line there and looked for prices to possibly bounce there. I guess I should put it back maybe until I get through talking about these trades. And so that led me to take a trade or two in there with a little trap there. But I'll talk about that in a minute. It was a little slow getting started. Let me get this. But it was obvious we had strong support down here. An aggressive trader might have even bought this right here. When we bounced, it's such a big bar and it's so hard to get a good stop. And I've had a couple of questions about that lately. And what you have to do is just if you enter on a stop right there and you don't use a limit order, what you have to do is you just can't be more than 2 points. And if that means that your stop's just right in here somewhere, then maybe you want to risk that. And you can see it wouldn't have come back and stopped you out. And you might even just say, okay, I know I'm reading this right. I'm pretty confident that prices are going to bounce here. So I'm going to move my stop down here where it belongs. And you can see that would have saved you here even if you rode this pullback. That's the reason we use these logical places, because we use them for a reason. But if you don't know what you're doing, or you're not really good at reading the price action, or if you get it wrong, you could take a big hit doing that. So my suggestion is, if you want to take a trade like this, and just assuming this closes on a tie, and this is all green instead of red right here, just put your stop there and let your stop be 2 points and see what happens. If it ticks one tick higher and executes your order and starts backing up and looks like the bottom's gonna drop out of it, just close it and wait for a better entry or whatever. But that's why it's always better to wait on that second entry, which is going to come here. And that's what I did in this case. That was the first trade I saw this morning. Let me move that. You got your first entry off that low, pull back, and you got that little trap. Notice how it went a little bit lower in those last two double bottoms, pulls back, and it breaks higher right there. You might have thought about using a limit order here because it's not a very bullish bar. But the odds are we're going up here and you got plenty of room. So you might have used a limit order a few ticks back in there, and it would have gotten filled all the way back to maybe a couple of ticks from the low there. And then it's an easy move up. And, even if you held on to your runners, they would have got stopped out. But prices were coming back down anyway. So this is where I would have looked to think about exiting any kind of runners, because this is looking definitely on the low side. And if we turn down here and get a second entry short, then, there's a good chance that we're looking at a trading range here. And you can see prices swinging to both sides of the EMA. That's your first real clue. And so you get a second entry short off this new high here. This swings higher than this one, so that's a new high. First entry, pull back, second entry, and it's a fairly bearish bar. It didn't quite close on its low, but it's good enough. It's a much lower high. Look how each swing high is lower. There's a good chance we're going to at least make a measured leg down. There's a really good chance we may go all the way down and test the low again, and that's exactly where it goes. And when you start, if you didn't just automatically take put your a limit fill order down here on any runners, when you start to see the overlap there, just go ahead and exit and take what it's giving you. And guess what? It bounces. And again, aggressive trader might have gone long right there. There's enough evidence here now that this is looking like a trading range. So you might have just gone long there, and I probably should just circle that in green. Let me get a green circle and just go ahead and circle that one, because aggressive trader is going to take that trade. Actually, the reason I think now that looking back at it that I didn't is because it didn't break above on this bar. This bar would have went ahead and broken higher. I probably would have circled that blue. But because it didn't, it's not really rejecting prices. But you got enough evidence here that, it's worth risking back to the EMA, which it's probably going back there. So I'm going to go ahead and make that one green. But that's why I didn't make it blue, or I probably would have just made that one blue. Look how many times prices bounced down there. And then guess what? You get a second entry long here off the low, but notice how you had tried to go lower twice. So you got a new low, pulling back, first entry short, pull back, second entry short, it fails. Just go long right there. It's a nice reversal bar. You got that one tick lower than those two lows, so you kind of got that trap effect, and I love those setups. You don't know that it's going to take off like this, but you figure it's going to go back up to the high side. But man, this thing just takes off, and you really got somewhat of a short-term kind of trend line, probably working up through here like so, and then you get the correction, and then so by that point, draw this line right here and then move this up, and then now you're looking for that measured move, and guess what? That gets you there too. So there's always multiple ways to get that measured move, not just only showing you the first way I showed you earlier. Well, when you can find multiple ways to get that measured move, that just makes it all the more stronger. I didn't really see anything else in here I liked until here. You get a two-legged pullback. This is a retest of this breakout area here. You got a little congestion there, but that's because prices are struggling to go lower, and that's usually an indication that you're going to get a little reversal maybe. And it's a second entry long, so just take that one. I like that one right there. It's a breakout pullback, but it's a second entry long, so that makes it a little better. And it was, it got a little dicey in here when it hit that high and did turn down. and it would have gotten any runners, but it was good enough for a scalp, and then it keeps going higher, and then I would have drawn your line off those first couple of swings there, and then you can just kind of see how many times it bounced here going up. This one is more like a breakout pullback long. Notice this little congestion. It breaks out, pulls back, and it bounces. And I had that line originally like so, and that's probably more like it. Bounces right off that line. Then it pulls back and gives you a second entry off that line. And, you know, this is a strong move up through here. Then it pulls back to that line again, tests it twice, and goes higher again. And, you know, these get kind of scary because they're so close to the high. But when you see a trend like this with all these little tiny bars and it just keeps going higher and higher and higher, that's the only way to enter. You're not going to get a better entry than that. And a real aggressive trader might have taken every one of these little corrections until we got to the high, which is right along here where the other side is. And that's where you know, that's what you're looking for, is for a measured equal distance. And so just take this same line and drag it up here, and it fits really nicely, and then that's when you get the correction and the break and all that stuff. So, but then you get a bigger pullback. You get another second entry long. You're looking for a retest of the high. You didn't get it here. You got an easy scalp. And notice I waited on the second entry here. Right here, notice this high is lower than that high, so that's similar to a second entry. You go up and you pull back, and it's a correction. So it's like there's two legs up there. It's hard to see right there at that level, but it's there. So I didn't like going long above this one, but I like that second entry right there, and it got just enough to get the scalp, not a tick more. And then by that time, I wasn't so sure. We were hung up here. You don't really want to take that first entry. Wait on the second entry, and you really never got one until really what you got was there's a tick lower right here, so that's same repeat pattern as we had back here that I showed you earlier. You got that new low, it broke lower, then you go up, you pull back, you try to go lower once, you come back, you try to go lower again, and then it breaks higher. It took it a while to work out. It made me a little nervous, but I liked that trade. It's a failed second entry low, and it worked on up to get to its new high, and you're looking for a new high as well. And then you start correcting, and it's, you know, again, you know, you've got strong support here. You don't have a lot of evidence that you're not going to be able to go higher yet. So now you get the double top here on this new high. And you already know the support's good, so when it comes back right here, take that long. And you might have even considered going short on the second entry here. It wasn't a very good setup. It's right in the middle. So I didn't like going short on that second entry. And a real aggressive trader might have gone short right there. But notice you could have done that there and you would have got burned. So you got to be careful. You got to wait on the right setup. The trend has kind of been up. The bias is up. But when you get this, notice this trap here. Notice you got a new high, this higher than that swing, higher than that swing. You pull back, you got a first entry long. You pull back, you got a second entry long when it ticked higher, and it fails instantly and turns down, closes on its very low. That's a long trap, and there's a good chance prices are coming back down here. Just go short right there. Easy scalp. And then you break out the bottom, and it's that same kind of setup you had over here and back here. You break lower. I love these traps. You get a second entry there, but it's not a great setup bar. It's a little doji, and so I wasn't real confident in it. Aggressive trader would have taken it though, and you see it would have worked. But you're better off just wait and sit tight, and you see you get that trap again. It breaks lower. There's your new low. First entry short. Pull back. Second entry short, and then look at it go. They got everybody trapped. So that was the better trade. But an aggressive trader probably would have taken that one. And to be honest with you, a real aggressive trader probably would have taken this one too. But that's even more aggressive because that's not a very, of course, there's only one tick from closing on the high. And that could have easily ticked back on your chart. You may have closed on the very high. It's, you know, it's like you're really, you know, it's really 50 cents one way, $0.50 the other. That could have been bullish bar versus a doji, but I still look at that as a doji, so I marked it as aggressive on my chart. And that really got you, into the 1 o'clock hour or so, and there weren't any more trades until maybe the trap right here. And even then, uh, I would have been a little leery of it because we're trending higher again. It probably would have worked. Let's just see if it would have worked. If you used a stop, your order would have been at 67, and yeah, you got just enough. You can see it got just enough ticks to be able to scalp out. They don't fail very often, and even when they're not going to continue in that direction, they usually work, move enough to get your scalp. So those traps are very powerful. The ones I like are the ones that move real quickly, and you usually know when you catch them, like right here, they trapped everybody and it rockets off. And that's what happened really kind of right here. They trapped everybody the long side and then it rockets down. So, but that's what I saw today. Again, you back out, you got a trading range, and you just made an equal distance move up. You got one leg, then an equal leg up, and you could have really measured this as one leg, and then the start of the next one here, and still got to the same place. There's different ways to do it. So you had range rules, trend rules, back into range rules, and then you really got another little trend right here. It's not on there, but you got a little trend working up through here. And you just play around with it till you get it right. And I get a lot of questions about this. People will send me their charts and their little channels are close, but they're not, and they don't have to be exactly right, but they got to be close. And when I'm saying close, they got to fit nicely. In other words, it's obvious this trend line is right and good because look how many times prices touch it and it turns them. 1, 2, 3, 4, 5, 6, 7. And even here you had an attempt at it. 7 or 8 times. So you know that line is good. But I'll see somebody come in and they'll have theirs. Maybe they drew theirs like that right there. And they're just, they might even have them better than that. That's probably not a good example, but maybe they have theirs like something like that right there. And you can see the prices are fitting in there, but then they drop down. They just don't fit as neatly. What you're looking for is for prices to fit in there neatly and when I say neatly, I mean every time they come back and touch it, it holds and it turns prices. That's a good sign, just like these lines. Look how many times prices, it's not as evident here, it wasn't but that's because the trend was up. But look across here, how many times prices came and touched this area and reversed. You know that's strong support. You know you're going to get a bounce there. That's a proven one. This one wasn't really proven that well, and that's why I didn't like going short right there. I wanted to wait on the second entry to make sure that it was going to hold, and because it could have easily bounced here and went straight on through. You get a little pull back and then go straight on through, and then this is not that strong. And then I would have moved it down to those closes, and look where you found resistance again, but it had enough buying momentum to get through there, and then it goes on higher. So you got to make sure again that you get the more touches you get, the more that line is correct. Just like here, it's obvious my prices are fitting in this channel really well. They're bouncing here every time. Even when they break through, they fail and they come back and test it and keep going higher. And every time they touch it off the low side, they turn down until it finally gets this trap down here in the momentum and it goes on through. But it still comes back and tests it before it goes higher. And this is where you'd be looking to get back in to go up, not trying to buy otherwise. You want to see this. If you go breaking out right here and you don't start getting into here and here, then you get stopped out only to watch it go where you think it's going to go. So I hope all that makes sense to you. It's a fairly standard day, but you got a little mix of everything today. But for the most part, there's an upward bias to today, starting before the market opened. And that's a really strong move right there. So you might get a measured move from here that's equal to this before it's over. So I'm going to wrap it up for today. It's 20 minutes into this one. It's getting a little long, but I'm going to wrap it up. We'll be back to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next